We continue to clock in fresh highs pretty much on a daily basis. Though yesterday eased off from there, but nonetheless, we have managed to close in at elevated levels. There you go, the Nifty intraday graph. A little bit of a chop and churn, but within a very, very narrow band. And yes, the bias in the market, that continues to be an extremely strong one. And it was no different yesterday. The bulls seem to be pretty much in control. But of course, let's talk about what the setup is looking like this morning. While, guys, the roads were pretty much absolutely empty. I think everyone's just preempted the traffic because of Visarjan Day, and no one's working except us.
7:30 in the morning. 3:30 in the morning, the streets would be different. 8:30 in the morning, it will be very different. And 11:30 in the morning, it'll be difficult to walk.
But it is a bank holiday, right? Is it
no,
not?
there is a lot of confusion in the bank
holiday. A lot of
holiday.
offices are shut today.
A lot of educational institutions offices.
Frankly, barring some pockets where the big Ganpati, they actually with the path, if you don't cross and if your house is not there, Visarjan is actually quite well coordinated because everyone's on the road and everyone knows, how the traffic management has been done. And that's what I always look at. Okay, there you go. These are images of last year's Ganpati. And if you are not in this part of Mumbai, for Maharashtra and especially in Mumbai and Pune, this is a spectacular feat to see Ganpatis come in. The devotees, they go. There is a celebration. It almost is like a carnival. And with each passing year, having lived in Mumbai for almost 2 decades now, I can vouch for it that the grandeur of Ganpati and the Ganpati Visarjan has only become magical. So magical is the word, faith is what describes us, mood is what really, captivates us, and energy and, energy and perhaps belief is something which really galvanizes this entire Ganpati festival in Mumbai.
Yeah, and it is it also sort of marks the beginning of the festive season. Now, next you're going to have Navratri, then Dussehra, then Diwali. So that feel-good factor as well is pretty much there, as is the case with the street as well. Though, of course, the big trigger is going to be, it was a mixed session on Wall Street overnight. The Dow managed to eke out gains. The FOMC meet, the big trigger for global markets, is kicked off. A 25 bips cut seems to be pretty much par for the course and well priced in. You've got the crude prices which have sort of risen because of that hurricane woes, which have sort of offset the demand concerns. The 10-year yield has now slipped to 3.64%. It is currently at May 2023 lows. But yeah, the big question is what the Fed commentary is going to be, and is it going to be more than 25 bips? Then, of course, it's red flags for the economy.
See, Aisha, there's always this debate that whether 25 bips is good or 50 directionally is that Fed will move first and then they would take it easy. Depending on who you're asking, you'll actually get a different answer. But my understanding of the situation is that if the Fed does 50, that for me is an indication that they're worried about the economy. And if the Fed does 25, that means that they very much are in control of what is happening in the US economy in terms of growth. So 25 is a signal. 25 will not have an impact per se, but 50 is something which can argue, where everybody would argue back and say that, oh my God, what is that data Fed has that they've suddenly done 50, whereas the mood point a couple of months ago was very different. I think 25 is better than 50. 50 is something which may excite the market in the near term, but that also is an indication that in the long term, the Fed is worried about the way how the economic growth would move. So those are two factors which clearly are at play in terms of considering what the Fed would do. Meanwhile, the other factor, which is the FI factor, I would still say we should not read too much into yesterday's data because that's one-off. Directionally, I think flows have been strong. So the two factors which would be at play this week, one is Fed and second is FIs. Fed is something which is awaited. FIs is something which, barring yesterday, is looking reasonably decent.
Yes, indeed. And let's also address what's happening when it comes to the entire metals basket as well, the non-ferrous metals and the kind of fall that we've seen there in the non-ferrous metals from those 2024 highs to the current levels that they're at, as well as the likes of an LME aluminium, copper and LME zinc. Remember, their recent low as well was near the 9th of September, and there has been that recovery from those levels, nearly 8% for an LME aluminium, Nikunj.
See, I think a trade is coming here, and I'm just going to take a slight point of departure that why are we talking about metals this morning? And the reason why we are talking about metal this morning is that because if I look at crude as the canary in a coal mine, which is indicating which way the demand scenario of the setup is moving, then crude has managed to bounce back. If the technical indicators, which is DXY and other factors, are on your side, and if in a sense the market will get excited if Fed is going to cut rates, then basic risk on trade will start again. Typically, a rate cut coincides with weakness in dollar index, and that's also coincides with rally in emerging markets, which has happened, and strength in metals coming back. Strength in metals and commodities has not played out so far, but I would make a case that there is case for a subtle and case for a short-term outperformance, at least in some of the base metal prices. So last week, if we were speaking about last 2 weeks, we've been talking about financials and NBFCs as a trade. I think bounce in metal, not a big, not a big rise, but a bounce stroke, dinky rally in metals is something which cannot be ruled out, which I think will translate into some of the metal stocks. Let's look at some intradays here. Vedanta, Tata Steel, JSW, JSPL, all the intradays here. And in a sense, we can establish the fact that yesterday we did see volume action and price action kicking back again in some of the metal stocks. Let's look at it. See Tata Steel, it has stabilized. Again, you look at JSW. All these stocks in a sense are showing signs that either they bottomed out or they're getting ready to really piggy bank on what could happen to global metal prices.
Okay, yes, indeed, important to track what's happening in that space, but also important to track how the markets have been faring. And yes, indeed, we did hit life highs in trade yesterday. We went on to close flat after that. We were close to the 25,400 mark. By the time we simmered down in trade, it was an absolute flat reading on the index, but I guess no complaints given the fact that you had the broader markets as well in tandem, the Sensex as well from those intraday lows managed to rebound about 100 points. A lot of those capital market stocks surged. You had a pocket in trade that was a little bit newsy. So, for example, the sugar basket reacted to the production, they gained on the production fillip, whereas some of those defensive stocks which have been, or the defensives that have been at the forefront, took a bit of a backseat, such as the FMCG stocks and financial services as well. They didn't quite participate. Although you did have a continued buy figure in the DII market, the FIIs, it was a net sell figure after a few consecutive days of buying of about 1,600 odd crore rupees. So flat, Nikunj, but after hitting those life highs yesterday.
Price action has been more than satisfactory for Indian markets, and frankly, the fact that we are at an all-time high, we are consolidating. You get one big day, then markets consolidate, but the bias, I guess, is clearly on the upside. So there were three factors at play, which in a sense were pushing the bulls back. One was global volatility, which seems to be stabilizing. Second was FI selling, which seems to be on our favor. And third is this entire action and excitement which is happening in the IPO market and the SME market, which I think continues. But 2 out of 3 concerns or impediments or the bump on the road, I think in the near term are getting addressed. B, we must recognize that the sectoral churn in the market has happened. And I think it is an ongoing process because the global weather patterns are changing. When I say weather pattern, I'm not talking about global warming, I'm talking about weather patterns for the financial market, and which is getting reflected in the way our financials are making a comeback, how some of the FMCG stocks are making a comeback, and how now metal stocks and commodity stocks are getting ready for a rally. So the big message from the market is that you stay invested. I think the global concerns have taken a backseat. Momentum, I think financials have rediscovered momentum, metals could rediscover momentum going forward, and FMCG is already in some kind of an outperformance mode.
Yeah, absolutely. But the big one, of course, yesterday, which caught everyone's eye, was the Bajaj Finance housing listing. And what a debut. I mean, on listing day, it managed to clock in that 1 lakh crore rupee market cap already.
Yeah, Aisha, it is not the percentage gain. Look, it was expected to win stellar listing, and it went up the most permissible limit, which is 20%. It may go higher today as well. But the fact that the market cap this franchise has created, it has just come out of thin air. I mean, 1 lakh crore is no mean feat. It has taken, Indian hotels' entire lifetime of couple of, years of listing, a couple of decades of stock market presence to reach that coveted mark of 1 lakh crore. Similarly, Apollo Hospital just about reaching 1 lakh crore. Info Edge, I'm just talking about companies just to tell our viewers that what is the importance of 1 lakh crore. And here's Bajaj Finance, or Bajaj Housing Finance, a subsidiary of Bajaj Finance, a 10-year-old business, not even a 10-year business. The promoter creates value and the markets are rewarding it. So that is the way in which markets right now perhaps are rewarding, and they in a sense are realizing wherever good businesses are getting created. Now for our viewers, which is very important, what do you do? It's very hard to make a case that you want to buy into Bajaj Finance after that bumper listing. Why? Because the risk reward ratio clearly is not going to be something which could be called as favorable. I mean, the stock has actually doubled, and it may go up more. So a franchise like Bajaj Housing Finance needs to be bought when there is bad news, when there is stress in the market, and that's the time you do not want to make the mistake of not buying it. So right now, don't do the mistake of chasing the stock, but when the stock falls, do not do the mistake of not buying the stock, because good businesses bought at a time of distress, they always make money, but good businesses bought at the time of euphoria never make money.
If you like this video, then like, share and subscribe to ET Now.